Hi everyone, I'm Michael Abadi and welcome to Vermont Senate Spotlight, and we are at our second episode. The session is kicked off. Budget's been rolled out and now senators have work to do, and I'm really glad that Senator TIm Ashe from Chittenden County could make it here today. He's a Democrat / progressive, and he is the chair of the Senate Finance Committee, which is as powerful as it sounds. And I have a really basic question to ask you, because there's also the powerful, they always say, Senate Appropriations Committee.
Yeah.
So how do the roles and tasks and divvy up between appropriations and finance?
Well, appropriations is best understood from the outside as the committee that spends money. They determine what the priorities are of the legislature, whether it's cleaning up the environment or various programs for low-income people or anything under the sun, and how much we should spend to achieve the objectives. On the Finance Committee, we decide how to raise that money. So fees, taxes, assessments, we're the ones who bring in the money. Appropriations are the ones that spend it. But one thing that isn't obvious from the name Finance Committee is that we also have oversight of health insurance, banks, credit unions, utilities, and so the scope is actually pretty broad in addition to just determining how we raise the money.
Okay. Now, if a bill is, say, going to be passed, it has to go through appropriations to figure out how much it'll cost, and then finance to figure out how it'll be paid for?
Well,
or
if a bill proposes to add new spending, it has to go to the Appropriations Committee.
Okay.
If a bill proposes to raise new money in any way, shape, or form, it has to go through the Finance Committee.
Got it.
I'll give you a just everyday example. Tomorrow my committee will be taking up an alcohol bill related to how much tax is paid on beer with certain alcohol content. Okay?
This is the trend towards higher content?
Because beers are becoming slightly more potent, the old laws that are built around 3% swag beer in white cans no longer maybe meets the needs of today's beer community, particularly the craft beer community in Vermont. But because there's a proposal to change the way that tax is levied against the beer based on alcohol content, it has to come to our committee. But we're not proposing in the bill any new programs or anything, so it does not have to go to appropriations because there'll be no new spending.
So that could just maybe chip away at a deficit, or
helps
just
contribute ever so modestly towards the funds that come in to support government.
Okay. That's actually fascinating. Do you want to get into how might the beer tax at above 5% it would be?
Well, in this case, the current law taxes beer less if it's under 6% than it does if it's over. It jumps dramatically for beer with alcohol content over 6%. The problem is most of the craft beers made in Vermont, many of them are between 5 and 8, let's say.
Okay.
So we're proposing to move it from 6 to 8 so that we can continue to help foster an environment with great craft beers being made here in Vermont and not stick them with a pretty sizable tax, which may be more appropriate for the out-of-state, the big dogs who can travel the country with their product.
Right. Okay. Another way I see you are on the, let me get it right, property tax exemption study and committee.
You got it all.
That is looking at property tax exemptions for, let me see if I can get this one, public, pious, and charitable institutions.
You've done your homework, and you're a good student.
Thank you. But I don't know what any of that means. I know you've met a number of times, the last time being in December, to see just, I guess, tighten up some exemptions, maybe set some precedent with taxing organizations that have traditionally been exempt.
If I had 8.5 by 11 pieces of paper in front of us that had lists, just one after the other, of properties in Vermont that are exempt from property taxes, the stack would be this high. Over time, that includes everything from churches to various nonprofit organizations, service clubs, volunteer fire departments, you name it. There are thousands of such properties throughout the state. Collectively, that means that the value of those properties is off of the tax rolls.
Right.
They're on the grand list, but they're not paying any taxes. Well, with the growth of the nonprofit sector and the more properties owned by those nonprofit entities, it means that fewer and fewer parcels are picking up the tab for all of state government. And so there has been a growing interest in the legislature to get a better handle on what the composition of these properties is, so that we can determine whether there are any changes that need to be made moving forward, so that we can help relieve some of the pressure that homeowners are facing as their property tax bills keep going up. And that was the motivation. And what this committee has recommended, and I should say there were 7 members of the committee, 2 of the members, including myself, did not sign the ultimate recommendation.
Okay.
But there are a couple components. One thing we did was just try to clean up the language in the so-called public, pious, and charitable exemption in the state statutes. There's not much objection there. It just makes it more legible or clear to the average person. But they make one important change, which is the reason I opposed the proposal, which was to require that every property that would seek to be exempt from state or municipal taxes would have to pass a vote at the local level. All right? So if Orca owned this studio and the property around it, you would have to go every 5 years before the voters and get them to re-up your property tax exemption.
Okay.
Now, for some organizations, they might never have a problem. They might have votes every 5 years. They sail through 95%, 100% to zero, right? But let's say Orca, let's say one of your hosts of one of your programs aired content maybe without the knowledge of the board of directors, and it was objectionable to some people in the community, and it stirred up a little controversy, which I'm sure Orca's faced from time to time over its existence. And that happened to be the year you had to go in for your vote.
Year 5,
and
right?
Suddenly people said, you know, I used to like Orca just fine, but I'm really upset with them. And then they look at the ballot and they're like, oh, this is my chance to really punish them, and you say no.
Sure.
And let's just say more than half the people say no, suddenly Orca doesn't exist, right? And that could, in a place like Burlington, the town I live in, we have many, many dozens of such properties, and the idea that every year you'd look at a ballot and you'd be checking yes or no.
This would be like town meeting day in March? It
Yeah,
would come down then?
exactly. So I don't think that's workable, nor is it desirable. And so that, I
That's
think,
in the present proposal?
that's in the proposal that the committee put out, and I don't think that that has much traction.
Okay. Presently, is it just the local lister's call whether someone falls under public, pious, or charitable?
If I was going to start the Church of Orca tomorrow, okay, and you'd know better than me what that faith might be. But if you or I started the Church of Orca tomorrow and purchased property to run the activities of the Church of Orca, we would go to the municipal assessor, and that would begin the process of seeking a locally determined exemption. Once that's granted, you then get the state exemption. So you might have listers from town to town who determine things differently for the same type of property. So that's another issue that I think begs some investigation, whether let's say the American Legion in one community might get the exemption because they do a lot of service activities and scholarships. But in the neighboring town, maybe the lister says, you know what, you've just become a bar and we're not going to give you an exemption. But maybe their activities actually aren't different, but one's being treated differently than the other. So those were the types of issues that led to this committee in the first place.
Okay. Do you have a sense of the origins of these tax exemptions? How public, pious, and charitable organizations it must have some deep roots.
Well, the thinking is no different than the general concept behind nonprofit organizations, which is that to meet the spirit of a nonprofit organization, one, you're not making profit, right? You don't have shareholders. You don't get profit that gets distributed to shareholders or partners. The money gets recirculated through the organization to further a mission that is defined in your IRS filing. But the primary reason that you have a exemption under the public, pious, and charitable is that you do certain things for the community or for the state, and there's a value associated with those things. It might not be easy to put a monetary figure on it, but there's a general belief that what you do gives value to the community. And by exempting the property tax payment, it's like reducing commensurate to the value you're giving.
Okay.
And that's the thinking.
Okay. So it isn't saying to public, pious, and charitable organizations. You got that property tax exemption. Now you be quiet in the public sphere. You're still fully welcome to join the political debates.
Well, there are certain activities which do not qualify. Certain political activities are not permitted with the use of nonprofit funds, but it's a little different. I mean, a close-to-home example is there's a group, Public Assets Institute, which is based in Montpelier, former Representative Paul Silo. They are generally viewed as a left-of-center policy think tank. In the Northeast Kingdom, there's the Ethan Allen Institute, which has been viewed as a right-of-center with John McClowery, former member of the state Senate. They have very different political viewpoints. They're not involved in elections. They're policy think tanks.
Sure.
But they both are exempt organizations because what they're doing is a broad public advocacy that theoretically benefits the public discourse.
Okay.
If they started, advocating for candidates, then they have crossed a line.
Got it, got it. And then there's a whole issue, I guess, on the public side of things is colleges, UVM would be in the...
Well, there are some, back about 12 years ago, maybe 13 years ago, the House of Representatives here in Vermont passed a bill which would have required every college and university in Vermont to reach an agreement with the host community, and that agreement would have had to basically cut a check on an annual basis to offset the impacts they have on the local community. In Burlington, the University of Vermont and Champlain College have reached these types of monetary agreements where they make a payment of some number of hundreds of thousands a year because the students are downtown, the police and fire and emergency rescue.
They leave a lot of furniture in the spring, right?
A lot of cleanup at certain times a year. So there are those impacts. The university and the college in that instance have acknowledged that they spill over into the community and they've reached a monetary agreement. Not every college or university has such an agreement.
Okay.
So one of the recommendations in the report from this committee is to require that within the next year or so, this type of agreement is reached in every instance around the state.
Got it.
I think that there's a lot to that because even if the host community doesn't want the money, it's good for them to sit down and say, what are the mutual benefits of our relationship? You as the institution, we as the municipality, and let's just celebrate those things perhaps. In other instances, maybe you've got a smaller town and they haven't had the ability to negotiate effectively with a large institution, and this will be the thing that gives them that leverage.
Right.
So I think asking people to get together and work that out is not a bad thing.
So not called a tax, municipal service
It would be
fee.
it would be a memorandum of understanding. It could be a fee-for-service agreement. It's called different things, but it's off the books. It's a direct, essentially voluntary negotiation. And what the bill proposed to do is say, if you can't come up with something, we want you to go through sort of a structured mediation process.
Sure. In the conservative movement right now, there's this kind of tax the poor argument that everyone needs some skin in the game. So there are these people that don't make enough money to get taxed, and that kind of everyone should be in the pool so that everyone has a stake in it. Do you see that argument working with public, pious, and charitable organizations? So they kind of need to get some quote-unquote skin in the game. It's kind of a parallel argument.
It's comparable in the sense that we have this growing class of properties that do not pay in. Now, they do pay income taxes and other things because the employees, they pay income tax and payroll tax and all those things. So it's not that they pay nothing into the system. But as the growth of that sector has continued on an upward trajectory in Vermont, fewer and fewer parcels are actually paying property taxes. So I think it actually crosses partisan boundaries. It's not a conservative or a liberal thing. It's a lot of interested legislators looking at the equation and saying it's getting so imbalanced that the time may have come to start asking for some contribution from those exempt properties.
Sure. Now, the listers are now going to be asked to value these tax-exempt properties but not actually tax them? Is that sort of step one warming up to the...
This past year, one of the frustrations has been that we don't even know how much value is being left off the tax rolls. If you're the local lister and you've got 1,000 parcels in front of you and 10 of them are exempt, so they're not going to pay anyways, you might not spend a lot of time on those 10.
On their door, right?
But as a result of leaving zeros next to those properties, some of which are spectacularly valuable, we don't really know what the untaxed universe looks like. So that let's say down the road it's determined that we need some contribution from exempt properties, you can't thoughtfully proceed without knowing what the values are, so you'd know what the fee against it would be.
You got to get some numbers right, yeah.
That's right.
Okay. And you said down the road, you don't see there being movement?
I think that it'll be discussed in the context of education, finance reform, and healthcare reform, because in both instances we're talking about multi-billion-dollar enterprises, and if you try and reform those, the tax implications up and down the ladder are pretty severe. So you would want to think about all this collectively rather than keep doing fundamental tax reforms, and then people get so dizzy and off balance that there's no predictability in life anymore.
Okay, I got you. That's actually a really good segue into the budget that Governor Shumlin just rolled out, and there was a $70 million deficit that has now kind of disappeared. Is it? Do you have a sense of just how the good news came to fruition?
Your question, the way you phrased that, disappeared with a question mark, I think is typical of how many have viewed the budget. Typically after a budget's announced, there's a lot of noise because either people are really happy or unhappy, and this year seems to be a holding pattern budget, and so people aren't too worked up in any direction. When the administration started writing this budget, there was talk of a $70 million gap. That's an estimate. So that's based on projected growth of various social programs. It's based on expected revenues coming in. And it turns out the revenues are slightly better than we thought. That helps close the gap a little bit. Some of the social service programs didn't grow quite as much. And then once again, we've used one-time money to paper over some of that gap. So $30 million of that 70 original gap are monies like taking money from the Tobacco Trust Fund and a couple other one-time settlements. What that means is that we might all collectively breathe a little bit of a sigh of relief that there's no crisis, but next year that $30 million in one-time money, because it's one time, will not be there a second time, which means next year we're already starting with that $30 million hole without doing anything.
Okay.
You can only keep pushing it down the road so long as you get these one-time fixes. When the one-time fixes dry up, $30 million isn't going to be so easy to, address in a simple, painless budget address.
I think it was 2010. There was a lot of talk of the rainy day fund, whether to tap it or not. It's still tucked away somewhere, or it just doesn't seem to be in the headlines like it was previously.
There's something called the rainy day fund, which was really a misnomer because it was a stabilization reserve, which is a percentage of the budget which every year was put in an account, and it would get drawn down to meet payrolls, take care of certain expenses, and then get replenished when the funds came back in to pay it. And every year it would kind of roll over. It wasn't really a fund designed for worst case scenarios and having this emergency budget. Because it was commonly thought of as a rainy day fund, people thought, well, we should really solidify that it's the stabilization reserve and then create something that's actually called the rainy day fund. The rainy day fund has almost no money in it.
Okay.
So it exists.
That's why it's not in the headline.
It exists. It's not in the headline. It's not going to do much for us because it's been rated.
Okay.
It just was created 2 years ago. It had its first little infusion of cash, and then last year it got drained along with every other reserve we had.
Got it. Thank you. The Finance Committee does anything specific with Shumlin's budget, or it's just he's just presenting it to the Senate as a whole? Or
well, the budget is all spending, just spending. But there are Finance Committee implications. So one of the elements of the governor's, I'd call it financial package, the budget and how it's going to bring in the additional money necessary, because it's a budget that's grown, which means you need more money than you had anticipated, is the governor has proposed $14 million in new money coming in from something called the Healthcare Claims Assessment. So every time if you're a Blue Cross Blue Shield enrollee, every time you go to the doctor and you pay a bill, there's a little surcharge, which is a healthcare claims assessment, and then Blue Cross forwards it on to the state. So $14 million from all people who have insurance is a pretty broad levy to raise funds to help pay for some of the low-income healthcare programs.
Sure.
So that will go through our committee, and it's been met with, I would describe as a somewhat cool demeanor by our committee.
Okay, okay. And you would recommend it or not to the full Senate?
At this time, I would have to be very, very much convinced, but I do not start from a position that I think it's a wise idea.
Okay, gotcha. Is this a preview of coming attractions, this kind of health claims assessment? Is it a preview of coming attractions with healthcare financing as we roll into a single payer system by, where you got a 2017, 2018?
Well, the current law passed in 2011 and then modified in 2012. It's called Act 48. It set us on a course for a single-payer healthcare program. Sometimes it's called single-payer, sometimes it's universal healthcare. People use different names, but what they mean is a universal system where everyone has coverage. The preliminary idea for when that would start is January 1, 2017. Back in 2011, that was the belief about when we could actually start a new program, based on the federal government giving us a series of permissions to receive cash in more flexible ways from the feds and to be exempt from certain rules. Those things haven't happened yet, which isn't bad, and it's not a crisis, but those are things that are still to happen. The outcome of those requests to the feds are unknown at this time. It's likely the feds will want to work with us, but we don't know what the specifics will be. So we have some unknowns at the federal level. But then the financing system also poses a very interesting challenge, because what we're talking about is raising $2 billion through some public mechanism to replace roughly $2 billion in what are now private premiums that are paid.
Sure.
So first off, people have to get comfortable with the idea that this, whether it's 1.6 billion, which is the low estimate, or 2.2 billion, which is the high, we're not talking about adding 1.6 to 2.2 billion dollars to the state's healthcare expenditures. Like, we'd be crazy to be saying that.
Kind of already
it's
in the
replacing the money we raise with a commensurate amount from a different and hopefully more efficient mechanism. How you do that without creating disturbances to either subsets of the Vermont population or to the economy is a delicate dance. And I'll give you an example. Right now, most small businesses, businesses with fewer than 50 employees, do not offer health insurance to their employees. Their expense as a percentage of payroll is essentially zero, okay, to provide health care. Mm-hmm. If you had, let's just say, a flat payroll tax, which has been one of the proposals floated, you would be going from asking all these small businesses, the majority of small businesses, to go from paying 0% of payroll to 12 or 13 or 11 or 10. Doesn't really matter. The point is you're adding a cost that they have not anticipated for all these years. To me, that will cause a political storm which we would have to weather. So that will make us, it will require us to think creatively about, one, if that's the right mechanism, how do you transition in a way that it doesn't just blow up the economy? But that's only one possible method of financing a healthcare system. There are a whole array of other ways to finance it, some of which would be considered taxes, some which would be considered assessments, some could be considered premiums. The names take on political value or negative value, depending on who you ask. But ultimately, it's about finding a mechanism that truly would reduce the growth of costs and that works in harmony rather than at odds with the current economy as it's developed in Vermont.
Okay. So for someone who is already covered by their employer, the employer's cash used for coverage would just then go to the state. That's kind of the easy stuff. It would just be
that would be the easy conceptual framework. Would be just that the premium that you paid to Blue Cross or MVP or whoever is now under a payroll tax. I'm not saying that that's what we should do or shouldn't, but under a payroll tax finance system, instead of that premium, you'd be paying either the same, a little more, a little less, whatever, over here to this public pot of funds established for this purpose.
Which hopefully would be more bang for your buck, because it's all in one pool. And
well, if you're not getting more bang for the buck, I wouldn't think we should do it.
Right, right. The tricky stuff is the people that aren't covered by their employers, and there's a whole host of them. And then, okay, that's very helpful. A final note is also on this whole issue of raising money through properties. The current use program started in 1978. Do you want to explain what that is? It's, I guess, about a third of Vermont land is under.
It's 2.2 million acres are enrolled in current use. That's many thousands of parcels of land. And current use was established to make sure that parcels of land that were being utilized for active forestry and agriculture would not have to pay their fair market value in taxes, because to do so would be to put them out of business. If you put them out of business, land speculation and a whole lot of other things, you know, people have the little bumper sticker, "Don't Jersey Vermont."
Sure.
That's basically what it was meant to protect against, to make sure that the forester up in the kingdom could keep working that land. The farmer down in Addison County could keep working his or her land. It buys down their property tax bill quite dramatically, something on the order of 85% or so off the tab. So it's been an important program. It's helped keep the working landscape we see around us, which is all very valuable. There are some who are concerned that the growth of the program, it has become so successful in getting people to enroll that it's $55 million worth of tax reduction. Maybe we're giving away more than we ought to through this benefit. So I was on a committee of 6 members of the Senate that traveled the state this summer and fall, meeting with people who have enrolled parcels, local assessors and select board members and farmers and foresters, trying to get a handle on if there are any things about the program that could be reformed in a good way to help maintain the integrity of the program. We heard recommendations that ranged from gutting the program almost entirely to doing nothing and everything in between. And what we have really come down with is a series of recommendations about maintaining the integrity of the program. And I'll give you just one example that might be helpful to viewers. Right now, if you are an enrolled agricultural parcel in current use, you get a tremendous tax benefit. But there's actually no one who ever comes back out to see that you're still in agriculture, active agriculture. So it might be 10 years since you got in the program. For all we know, you're off in your vacation home for the last 10 years, and you've been letting the land go fallow, but you're still getting a huge tax benefit. So we're trying to have a little bit of compliance monitoring, which we think is the least we can ask. Those are the types of integrity-based measures that we're going to propose.
Got it. And that is a recommendation that a current use committee is forwarding.
It's a special committee made up of the chairs of Finance, Natural Resources, and Agriculture, with 3 additional members from those committees. And we are going to propose to the Agriculture Committee in the Senate that they begin the bill process with our recommendations, which we have an assurance that they will.
Got it. And then finally, you informed me before we started rolling cameras, Chittenden County has a new state senator as of today. Is that correct?
It's obviously a bittersweet experience, because Sally Fox, who had been in the Senate for 3.5 years, passed away, as people know. Her husband, Michael Sorokin, was appointed today. As I understand it, he's going to take a couple weeks, which I'm very happy he's doing, to continue his transition period in his personal life, and then he's going to start in mid-February. So he'll be the new addition to the Senate, and you know, as I said, it's bittersweet, but it at least brings closure to that vacancy process, which is actually very anxiety-producing for a lot of people, and I think including for Michael himself. So though we're obviously very devastated about Sally's passing, we're very excited for Michael to join us and to begin that new relationship. Because the 30 members of the Senate, for people from the outside, it's hard for them to always understand, but it really is like a family. And so a death in the family, but now a new member. So that's how I view it.
Yeah. A lot of the point of this show is to get people to know who's who, because there are only 30 of you, and you guys are making some big decisions. And so Michael will be able to carry on her work.
That's right.
Making a lot of sense. So I'm glad that is figured out for now. Appreciate the time, Tim.
I've enjoyed it.
And good night, everyone.